Central banks are thinking about unwinding all that liquidity creation.
Yeah.
So maybe we should enjoy it while it lasts, you know.
Hello, Patrizio, and thank you for joining us again. It's lovely to see you again and have you in our studio.
Thank you.
We're going to talk through a whole range of different topics today, including the S&P, Euro, and the dollar as well. Let's start with the S&P. There's been relatively low volumes as of late. Can you explain why this is happening?
Yeah, you know, we've been in a rather peculiar situation. There's very little volume and there's very little volatility. And actually we are close to all-time records. I mean, it happened in the mid-noughties in 2005, 2006, but we have not seen that since there. So it has mostly to do, obviously, with central banks trying really to manage, you know, expectations, they have been obviously supplying a lot of liquidity, nurturing risk appetite. We are in a risk-on environment, and it feeds on itself. You know, many people are shorting volatility, so it puts a lot of easiness on the ground. At the same time, time is moving on. Central banks, but maybe we'll get back to that. Central banks are thinking about unwinding all that liquidity creation.
Yeah.
So maybe we should enjoy it while it lasts. You know.
And also, let's move on to talk about the euro-dollar pair, which has been moving around quite a lot. Can you explain why this is, and do you expect it to continue?
Yeah, actually, that's obviously in this kind of low volume, you know, low volume, low volatility, something has moved, you know, and it's not a small market. It's the euro-dollar market. Actually, the dollar has been under pressure, and we have this pickup in the euro-dollar.
Yeah.
Obviously, it has a lot to do with more optimism on European politics, on European growth. I mean, growth has been picking up in Europe. At the same time, I don't know if it's very obvious from this chart, but it's quite important. You know, the red line is a yield spread, you know, between the euro and the dollar on short-term bonds. It's 2 years bonds. And actually, you can see you have this kind of jump in the blue line, in the exchange rate, which is going a bit ahead of what other markets are expecting. So there has been this kind of wake-up call for the euro. I would expect this to continue, but probably with a pause. And maybe we can have a look at it. I mean, the euro, or let's say the dollar, is probably in a medium to long-term, 1 year and more downtrend. And the euro has been catching up with some other currencies, and it has been jumping a bit.
So let's finish up by having a closer look at the dollar there. We spoke about it there, but what's next for the dollar in your opinion? Will we see more rate hikes? What's the next move?
Yeah, okay. So you see, obviously, now we will have a bit of pause in, everyone has been watching central banks. This is also about the carry. Maybe we can, that's simply the carry in real terms.
Yeah.
But I think what's really important, you know, central banks a few weeks ago have shocked the markets, you know, by saying, okay, wait a minute, now we are considering unwinding QE. We are considering for the US starting to sell some of the bonds we have on our balance sheet, and for the ECB to start reducing the volume of purchases. And this has been rolling markets, and since then they have been trying to correct the guidance, to change the message, they change the words, and this on. And now we have a pause there for 1 month or so until you know, the Jackson Hole Symposium at the end of August, which will be the big get together. And until then, it will be a bit of speculation. But my view is that they won't do, either the Fed or the ECB, they won't do anything or almost anything on rates. They cannot do it. There's too much leverage. It impacts too much corporate activity and whatever. So they will be extra cautious on interest rates, but they will go on. They announced it. They will do it very slowly, but they will start reducing the purchases of bonds. And this means what? This means that at some point it will turn negative. All that extra stimulus will disappear. And it means that all the extra liquidity which has been injecting will start to ebb. And this means simply much less support for riskier trades, much less food, let's say, for all that risk appetite that is around. And probably it will mean more selective markets, more volatile markets. And as I said, probably we have to not to focus too much on rates, but to enjoy this low volatility world for as long as it lasts.
Patrizio, thank you so much. It's been a
pleasure.
pleasure.
My pleasure. Thank you.
And thank you for watching. And if you like this interview and would like to find out more, as well as more news of everything affecting the FX markets, head over to dukascopy.tv.